Most people think there's one right loan when you're buying a home, and that belief, that one idea stops a lot of people from even starting. But the truth is, it's not about the best loan, it's about the best loan for you. And today, we're walking through all four: FHA, VA, USDA, and conventional. And we're going to use this vintage egg scale and these eggs to actually weigh your options. Hi, friends. I'm Kat with the Mortgage Tool Bus. My job isn't to sell you a loan. My job is to teach you how to get home. And this is episode 5. So if you've been on the bus with me, you already know we don't do overwhelm here. We do clarity, baby steps, and props that make this stuff actually make sense. Today's prop: eggs and this scale, which is from a county fair in 1907, by the way. Because home buying isn't about finding the perfect answer, it's about balance. And I am wearing a chicken dress because I have chickens, and all these eggs are from the chickens in my backyard. Lots of pretty colors. And I figure, what better way to show you the differences? Each of these eggs is a different path to home ownership. They all work, they just work differently, depending on where you're starting from, what you've saved, and what your goals are. This is where we weigh your real life against your options, not the maximum you qualify for, not what somebody else did, what actually fits you. All right, let's start cracking. Hopefully not really cracking. I've actually broke a couple eggs today. FHA is where a lot of people start. It's a great loan program. This loan is designed to be flexible. It was literally built for people who are earlier in their credit journey or who don't have a huge down payment saved up yet. If your credit score is 580 or higher, you may qualify with as little as 3.5% down. If it's below that, you're not necessarily out of the running. Sometimes 10% is required. That's something we look at together. This is the part I always want people to know before they fall in love with FHA. FHA has mortgage insurance when you put down less than 20%. Mortgage insurance for an FHA loan is called MIP. And unlike some loans, when you put down less than 10%, that MIP stays on for the life of the loan. If you put down 10% or more, it does fall off after 11 years. But most people using FHA are putting 3.5% down. That doesn't make FHA bad, it makes it a trade-off. A lot of people use FHA to get in the door, build some equity. And then if they qualify, they'll refinance later to remove it. That's not failure, that's strategy. Start building that equity for yourself. This is a good fit. Once again, if you're earlier in that credit journey, you don't have as big of a down payment saved up, or you have a higher DTI, debt to income. This one has more options, and I've seen as high as 56 or so percent of your income can go toward credit cards, car payments, student loans, and that mortgage payment. Conventional gets a reputation for being hard to qualify for, and honestly, it's more flexible than most people think. If you're a first-time buyer, and first time just means you haven't owned in the last 3 years, there are options as low as 3%. For others, 5% is a common starting point. Once again, if you put down less than 20%, you have mortgage insurance. For a conventional loan, it's called PMI, private mortgage insurance. But here's where conventional is different than FHA. PMI can be removed once you hit 20% equity. That's a meaningful difference over the life of the loan. It's worth factoring into your thinking. Conventional is a good fit if you have stronger credit, you want the option to remove mortgage insurance down the road, and you're comfortable with the qualifying requirements. It does have lower debt to income limits than an FHA. Different strengths, different trade-offs. Both real paths to home. VA. VA loans are one of the most powerful benefits available to people who've served this country. And I mean that. My husband Justin served. This loan is personal to me. So if you're a veteran, active duty, or you're not sure if you qualify, please stay with me for this part. Down payment. 0% down payment. Mortgage insurance? None. No monthly mortgage insurance. The combination of 0 down and no mortgage insurance is genuinely rare. It's one of the most valuable benefits in home financing. There is a VA funding fee, but here's something a lot of veterans don't know. If you have a service-connected disability rating, that fee can be waived. We'll always check for that. This is for eligible veterans, active duty service members, and some National Guard and Reserve members. If you've served or someone you love has, please look into this. And of the big four, last but not least is USDA. This one surprises people every single time I bring it up. It's designed for rural and eligible areas, and rural is a lot broader than you think. A lot of suburbs qualify, depending on your state. Once again, 0% down. USDA doesn't always publish a hard credit minimum, but most lenders look for around 640 as a guideline. You can actually look this up yourself. I'll link it below. USDA has an eligibility map where you can enter an address and see if it qualifies. It's for buyers who are open to location or who are already in an eligible area and who want low or no down payment options. So if you've been thinking about having your own chickens and you want more than just backyard ones, or maybe a Highland cow, or you just want to be off the beaten path, this could be a good one. It's one of the most overlooked paths to homeownership. 4 paths, 4 different situations they're built for. This scale has been weighing things for over 100 years. It doesn't care which side wins. It just shows you how they stack up. That's what I'm trying to do, show you what's actually possible for you so you can make a real decision for your life. Can I say something real quick? If you've been putting this off, thinking your credit isn't good enough, or you haven't saved enough, or it's just not the right time, I see you. Most people who feel that way aren't actually as far off as they think. They just haven't had someone sit down with them and show them their options. That's what this channel is for. No pressure, no shame, just information so you can make a real decision when you are ready. You don't need to have it all figured out to take the next step. Remember, baby steps. Enough of those, you'll reach your goal. And I've made something for you. First, my free home buyer roadmap. It's a visual checklist. I love lists. Steps 1 through 9, so you can see exactly where you are in the process and what comes next. No surprises. I'll link it below. Second, if you want to actually figure out which of these 4 paths might fit your situation, come have a clarity call with me. It's 15 to 30 minutes. Depends on how chatty we get. No pressure, no commitment, just a real conversation. I want to hear where you're coming from and where you're wanting to go. I'm not here to push you into anything. I'll walk with you as long as it takes. 6 months? A year? 2 years? Whatever you need. And if you know someone who's been wondering about this, share this video. They might need to hear it more than you do. 4 eggs. 1 scale. Lots of paths home, and whichever one is yours, we're going to find it. Let's go home. Before you go, which one of these surprised you the most? Drop it in the comments. I read every single one, and I want to show you this huge egg. So big. This one is jumbo and DSCR. Look at it. Off the scale. We'll talk about this in a future video. It's an option for move up and investment buyers. And if this fits your goals, we can talk about that too. I'm here for you.